Brand new equity peaks last week in the 200K and 50K portfolio that we were trading. And I want to show you the hypothetical versus live in the stock index portfolio 18. We did add the BLITZ package, but if you just strictly look at the hypothetical results for 3 micros on the stock index portfolio 18, you should be around 57.0375. The live results are 66, 69, 68. 200K portfolio, the hypotheticals, $19,012.50, trading 1 Emini, and the actual results for November are 34,764.80 because we did add the BLITZ, and so we're ahead of the stock index portfolio 18. And I want to show you those results, the hypotheticals to equity peaks, and this is the chart of the strategies. You see there's 10 NASDAQ strategies and there are 8 S&P strategies. Here is, I have it in multi-charts. Here is the multi-charts portfolio backtester, closed trade to closed trade drawdown and equity curve. And you can see right there how it came right back to equity peak. So the first week in November included 5 losing days. It was a week where it included the last day of October, and then 4 days in November, 5 losing days in a row, and then we bounced back last week, had a good week, made equity peaks, and good results here. And so it's been a while. You see this portfolio that we're trading, there's kind of a time period between equity peaks. And you see that when that happens and it comes back to equity peaks, it can run. And so there's a time period and then it can run. And a time period right here, this one that one doesn't run as much. It goes up and then it goes sideways again. And so you see, you pull back, hit equity peaks, and then run. Pull back and hit equity. And so you might get a day or two in here in these sequences historically where you can time it and say I'm going to stop and wait for another drawdown, but you run the risk of missing the run up as well. And so here is an example where it went sideways for a while here. Here's an example of it pulling back, hitting equity peaks and running, pulling back, hitting equity peaks and running. Every time there's a green dot, there's equity peak. So timing it is tricky. Your initial inclination is to want to pull back and wait for another drawdown, and you can do that. We had a massive run up, and so we're going to ride that and stick with it, because starting on a drawdown or adding during a drawdown is a good way to trade it. But oftentimes if you look at the data, if you wait, you can miss a massive run up before you get another drawdown. And so you might get a drawdown again, but that drawdown point is higher. Or you can get a drawdown. You can't potentially time it right, but systematically, it's best to stay with it right now. Here is the portfolio calculator. It has been updated through Friday, and this is the end of day combined equity curve analysis. You see 19,012.50 per Emini, and then if you look at the micros, you have 1 micro is 1901.25, and we're trading 3 of those in the 50K portfolio. Let's look at the BLITZ. We traded that Monday through Wednesday last week, and we don't want to trade it right now because the risk to worst case drawdown is much larger, and we're actually beating the we're up 34,764.80 in live results, and we're actually beating the combination of the stock index portfolio 18 plus BLITZ in this setup. So let's see here, and 33.30, we're underperforming it in the micros. If we were to match that in the micros, it would be plus about 9,900. So the micros tend to underperform the E-minis a little bit, and so that is where we are. I wanted to share those equity peaks with you, and it's always good to be ready to start on a drawdown or add contracts on a drawdown when they happen. These cycles can happen fast. It's a scenario where if you always buy it on the drawdown and then get out at the equity peaks and then wait for another drawdown and then get out on the equity peaks, that would work. You could actually be profitable in a strategy that only broke even and was very cyclical, going through drawdowns and running towards equity peaks. But when you have an equity curve that you're working at with this, if you have an equity peak here, if you get out on this equity peak and then you wait for a drawdown that doesn't happen here but happens here, this point right here is higher than this point, and so you missed that gap. And so that's why we're staying in it once again. I wanted to explain that to you. And so that is the latest equity peaks and hypothetical versus live results for our stock index portfolio as of Monday, November the 14th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.